How's it going, everyone? It's Sam. I want to talk to you about some of the top stocks for July. Now, these have specific catalysts for July. There are other stocks I think are fantastic long term, but these are ones that I think are going to perform well. And of course, I'm not a financial advisor. This is a very short time frame, but I am excited about these stocks, and I've either been adding positions in them or adding to my positions, or I have been getting ready to add to these positions. So I'm really excited about these stocks. We go from small cap, kind of more crypto related stocks, all the way up to some big players that have some big things coming this month for them. So some of the largest companies in the world, all the way down to some smaller high growth companies. Now, of course, if you guys don't mind hitting the like button, I appreciate that. If you guys want to see what I buy every single day, you can check out the link down below to Patreon. There is a discount too on there, so definitely check that out if you're interested. I will put it as one of the top links in the description. So the first stock that we have on the list today is Voyager Digital. Now, I know I've talked about this several times. I've talked about it a lot. However, the risk to reward on this one is getting juicy. It is about a $2.2 billion company right now. Now this is Canadian, so it's about 2.2 billion USD. And their revenue estimates are going to be insane for this quarter. So last quarter they did about 60 million in revenue, and they're becoming quite profitable. So they had 30 million in EBITDA, and they are growing at such a quick rate. From the calculations I've done, I think they'll be around 150 million in revenue this next quarter. And things are getting really interesting for them because their price has not moved. Actually, if we look at the last 6 months, since April, it's come down almost in half, so about 43%, while their revenue is going up exponentially. I think everyone's just fearful in Voyager right now and in some of these crypto exchanges, just in case the market cap, or just in case the whole crypto market continues to go down. So they are worried about investing in Voyager. They're worried about investing in some of these crypto exchanges. So the price isn't really moving right now, but crypto is starting to go up. And with that, these exchanges are going to do quite well. And at the point where there's FOMO on crypto, there's going to be FOMO on some of these exchanges, I believe. Now, Voyager Digital right now has about a 9 price to sales ratio. They have very high margins. And with this, as they grow their revenue, their margins are going to continue to increase as well. And it's going to be really, really interesting. So with that in mind, let's take a look at the price target. So it is a strong buy from TipRanks analysts. So they cover 4 different analysts here from all different firms. If you guys want, there is a link down to TipRanks. I'm starting to work with them a little bit more. I'm actually going to do some videos on their channel. There is a link down there to TipRanks in case you guys want it. It's pretty useful, from risk factors to news to what insiders are doing. You can check that out down below. They're also giving a massive sale right now. I forgot whether it's like 20% or 50%. It's something like that. I saw both. So definitely check that out down below if you're interested. But 90% upside, and it's a strong buy from analysts. In addition to that, we have a larger crypto player that's starting to move. It's up to 250. It went all the way down to about 210 just a couple weeks ago. This is Coinbase. They are sitting at about $53 billion, which is significantly less than they were before. They were around that $80 to $90 billion mark. Now they brought in 1.8 billion just last quarter in revenue, which puts them at a 7 to 7.5 price to sales ratio right now. And they're quite profitable with about $3 per share in earnings. That puts them at around a 20 to 24 price to earnings ratio right now. And if you find any other company in the world that's growing this quickly, that's this profitable, I dare you to write in the comments. I don't think there is another company out there that's this profitable. But again, people are worried about the transition from these higher fee structure companies, these higher fee structure exchanges, because that's how they make the majority of their money, to what's going to happen as the market matures when there are lower fees and more companies like maybe Fidelity get into crypto investing. That's going to be something that people are worried about, along with the fact that if the whole crypto market goes down in value, people are worried about that with these exchanges and how that will affect their revenue and net income. Now, of course, this is something where it's going to be dependent on the crypto market, but we are starting to see a bounce off the bottom. And Coinbase, I think, will have a lot more revenue this last quarter than they did the first quarter of the year because, again, crypto prices are elevated. There's a lot more trading and a lot more mass adoption right now and a lot of new users. Coinbase shows a 50% upside with 11 buy ratings and only 1 sell rating. So the highest price target is $650. The average price target is $382. So still providing a decent buying in price if you're looking long term. And again, these are just showing that, hey, these are depressed prices in crypto. Nothing really specific happening in July for these stocks right here, these two, but they've just been beaten down so much. This might be the month that they kind of come back. And in addition to that, we have the last crypto play of these 6 stocks here, and it's CleanSpark. This is a $600 million market cap stock. The forecast shows 177% upside. It's not covered by too many different analysts here. But when we look at it, I think they will have extreme revenue growth this next quarter. They are a 300% plus from the last quarter. So quarter 4 of last year to quarter 1 of this year, they 4x their revenue. So they are increasing that quickly. They're getting more miners. I'm not going to go through it because I just did a full video on it yesterday. So if you guys want to see that, you can go back to that video. I'll put it on the end screen. But CleanSpark, I think, is going to have a massive push when they show their next quarter earnings. I think people will start to see what's happening with CleanSpark. And if not that quarter, it'll be the third quarter. So it's still a growth story that people quite aren't looking at. They're looking at Mara and Riot if they're looking at miners, it seems like. And then we have Tattooed Chef. Now, this one's going to be really interesting. A lot of people are watching Tattooed Chef because of a couple different reasons. First of all, I'm watching it because of the fact that it has not moved like a lot of the other growth stocks. Now, I still consider Tattooed Chef a growth stock, even though it's in the food industry, because it's growing revenue really quickly. It's growing, 50% a year, something like that. Now, this is so interesting because it has only come back a little bit since its depressed prices about a month ago. If we look here, it went down to $16. It's come back about 30%, which is great, but it's actually come down a lot since the beginning of the month, about 11%, while stocks like Palantir have just continuously gone up like 50, 60%. Some other stocks too, some of the penny stocks, some of the lower cap stocks have come up a lot. While Tattooed Chef has come up, 30%, which is good, but still down from its highs significantly and still down from where it was just 3-4 weeks ago. So Tattooed Chef has something big coming up this month. And that's that we might get updated guidance on revenue. The reason I say this is after they acquired these 2 facilities that are going to bring in a lot of revenue. They're going to bring in, they said up to $200 million in the next couple of years, like $200 million annually, and that will be in the next couple of years. They haven't updated their guidance from the Karsten facility. So they haven't upgraded their revenue estimates because this is not quite in production yet. This is a brand new facility, they said. So they expect to update guidance again once production begins at the facility in the coming months. So the coming months. Now, this was all the way back May 12th. So nearly 2 months ago. So I think there's a pretty decent chance that we'll get updated revenue estimates. And I have no idea what this Karsten facility is going to be able to bring in. Honestly, they said $200 million between these 2 facilities in the next couple of years. Even if we just added $20 million in guidance, or maybe even $10 million this year, that would be a significant increase from the revenue we have now. It'd be a 4, 5, 10% increase, depending on whether it's 10 or 20 million, which would be big. Now, that would throw more money at their revenue. But overall, there's still this fear of Tattooed Chef. And we see that. The thing that I like about Tattooed Chef is the fact that there's still people that aren't sure about them, right? If we look at their guidance here, if we look at analysts, there's only one analyst covering them. It's an 8% downside. They're expecting a $19 price target. And the short interest is quite high. So we have about 277 million in short interest as of last month. and it's barely gone down recently to about 250. So the thing is, a lot of people are still thinking that Tattooed Chef is going to go down, which in one respect makes people very fearful of investing in them. However, if you really want outsized gains, you have to invest in stocks that not everyone is super excited about all the time. I mean, even if you look at something like Facebook, which a lot of people are bullish on, there's still fears of like antitrust, right? There's something recently this week that came out that said, hey, I think the court case was pretty much settled and said that they're not violating anything. But there's still fear from some investors. If you're investing in stocks that everyone's over the moon about, it's probably going to set up to be a bad situation because someone's going to sell and that's going to cause a massive sell-off and people are going to say, oh, this was overvalued because everyone was bullish on it. So what I'm getting at is the fact that Tattooed Chef is going to update guidance. There are already a lot of people betting against it. I feel very comfortable with the company overall. I like their products a lot. And the fact is, this is a longer term play. So anything can happen short term, I don't care. I'm just going to keep on picking it up. I actually bought a decent amount of their shares today, and they are my largest position. But I will continue to add in the future because people are still betting against it. I mean, $250 million is no joke on a market cap of just a couple billion. So it is not even $2 billion in market cap. So about 1 out of every 6 shares are shorted right now. So there's still a lot of potential in this one. Now, if we look at some other ones, these are the big players. We have Google. I just picked up a share of Google. It's my only share of Google. I want to add more. Their report date is July 28. This is a strong buy from analysts. We'll take a look at the price target here in a second, but they consistently outperform what people expect. Look at the last 4 quarters for them. We can see here their reported EPS was about $2 higher than what they expected, what analysts expected, so about 25 to 30% beat. And that was about $5 better here, which is about a 50% beat. And then $7 better here, $6 better here, another significant beat. And then they beat by about $11 here. So they beat by like 60% last quarter. I am really expecting another big beat because even if they went back a couple quarters and only hit this amount of EPS, they would still beat pretty significantly by about 15%. Now, I think people are expecting a beat because they've been consistently beating, but still, I think this is a fantastic company long term. I mean, take a look at the stair-stepping of earnings per share. So right now, based on the last quarter, we can actually see about a 25 price to earnings. Now, again, some people will say, well, if you take the last 4 quarters, we're not at 25 price to earnings, which I totally understand. But moving forward, that's pretty good. Now, I'm not looking at like the forward estimates for earnings, but I'm not even sure I would give them much weight because we've been consistently smashing them. So that's just something to keep in mind. Now, taking a look at what analysts are saying, we can see a 14% upside. I like Google. I think that it is one of the least risky stocks out there, and it still has a lot of good growth. Of course, there are less risky stocks out there, but if you're looking for something that's going to grow, that is a large player, Google is a great place. They're very diversified, a great place to put money. The next one, Facebook. Report date, July 27. They smashed earnings last quarter also. Now, what's interesting about them is they just became part of the $1 trillion club. So they're one of the only stocks in the world that's over $1 trillion in market cap. If we take a look here, their earnings have been increasing. Now, the last quarter came down a little bit. But to be honest, I'm not very surprised with that because a lot of people saw kind of like that resurgence of cases in the coronavirus cases. So I think some people were a little bit more cautious about advertising, and the first quarter of the year usually isn't as great for advertising companies as the fourth quarter because a lot of people are spending up their budget for advertising. Now that's one thing that makes this really impressive by Google, that they increased their earnings so much because it was the first quarter of the year. But I'm really expecting Facebook to do well. Again, if there's any weakness in Google or Facebook, you better believe I'm going to be picking some shares up. Facebook is one that I always say that I want to buy more in, and I just don't add enough. I never add enough in Facebook because they still have so much upside in my opinion. I was buying them under 150 at one point, and I really wish I would have added more, obviously. Right now, they show an 11% upside. Again, if you guys want to check out tip ranks, you can check it out down below. I'll put the link to the coupon, so definitely check that out if you're interested. Thank you guys so much for watching. Let me know what stocks you're watching out for over the next month. Again, anything can happen in a month. We can either see a ton of red, we can see a ton of green. Either way, it's going to be great because we either get better prices for buys or we can look at trimming maybe a little bit some of the more bloated positions. Thank you guys so much. I appreciate it, and I will see you in the next video. Bye.